Hello Wolfpack, we're going to be talking about interest rates today and the SPX, the DJI and the NASDAQ, so that's the S&P 500, the Dow Jones Industrial Average and also the NASDAQ. And those are the three basically critical US markets to get a kind of idea or understanding about the state of the US stock market, the state of the US financial markets, and also those are the three most influential markets on cryptocurrency. A lot of people would just look at the SPX, but I like looking at NASDAQ and also the Dow Jones as well. But you know, the connection between Bitcoin and the traditional markets is undeniable. All we have to do is go ahead and look at the top date on Bitcoin. Top date was at November 8th, right? We had the start of this bearish divergence here on the S&P 500 on November 8th, right? We started slowing down November 8th. Same thing with DJI, November 8th, and November 8th here on the NASDAQ was the top as well. And so the correction from Bitcoin has been fueled. It didn't trigger because of it, but it's been fueled and propelled faster to the downside because of the traditional markets going into a bit of a corrective period. And that would beg the question, well, if Bitcoin's been fueled to the downside or propelled to the downside because of a corrective period in the markets, what happens if the markets keep correcting? And the obvious answer to that would be Bitcoin's going to go further down. Okay, very simple. And one of the major things, and this is the reason I'm making this video, that is on investors' mind right now, both in traditional markets and cryptocurrency, is along with the world events that's happening with Ukraine and Russia and the US, is raising interest rates or maintaining the status quo on interest rates. Now, this is a very important topic. You don't really need to understand the technicals or fundamentals about what an interest rate is, what interest rates are in general, the effects they have on an economy at an advanced level. All you need to really understand is that, as follows, right? The Federal Reserve has pretty low interest rates right now, okay? And that means that the inflation rates can run rampant and the market, the stock market, can grow massively, all right? Obviously, this is unsustainable to maintain for a long period of time, because if the stock market grows irrationally for a long period of time while inflation gets insanely high, the entirety of the middle and lower classes are going to die, and that's going to lead to an uprooting of the system, essentially. Okay, so inflation is a bad thing. I think everyone knows that. And low interest rates encourage inflation, but they also encourage stock market growth. Okay, so the Federal Reserve has basically very, very low interest rates right now, and we're coming up on a couple of meetings here. One of these meetings is actually today, and one of the meetings is in March. Okay. And with inflation at these massive levels, there's only a few things that the Federal Reserve can actually do to kind of restore lower inflation rates, or at least put a cap on how high inflation can get. And one of those things is raising interest rates, okay? But the flip side of that coin is if they do raise interest rates, it is quite likely that the stock market will have a massive correction and we could actually go into a recession across the Western world, right? So I'm talking about a pretty much global recession. That's the worst case scenario, right? That could very well happen. Now, so those are the two kind of scenarios. So the Federal Reserve can either maintain the status quo, keep acting as if nothing's going on, keep the interest rates low, keep the short-term investors happy, keep the market pumping, but inflation will secretly kind of just rip away the purchasing power of the everyday citizen. Or they can act on this now, raise interest rates, and try and put a stop to inflation, but in doing so, they're putting the stock market at risk. And in doing so as well, if they do raise these interest rates, Bitcoin, obviously, since it's heavily correlated to the stock market, will obviously be at a massive risk as well. And this drop that we've had, this 50% correction, could be propelled even further to the downside on a very short basis, okay? And so those are the two kind of scenarios here for raising interest rates in the Federal Reserve. And the reason why it's becoming so interesting is because the Federal Reserve has actually said now, and Jerome Powell has actually said, who's the chairman or the president of the Federal Reserve, whatever it's called, right, the leader, has actually said that, hey, they're looking at raising interest rates, and they said specifically they're looking at doing this in March. And so the meeting in the next couple of days may not be the catalyst, but March is not very far away. March is only 2 months away. And essentially they're looking at raising interest rates in March, which means that the market is probably going to be very fearful until that point. And then when that happens, we might actually see a further correction, or it could be priced in. The point is, we don't know exactly what they're going to do. That's just what they've said they're going to do. That doesn't mean they're going to do it, right? One of the problems that kind of comes in when you're talking about interest rates is that, you know, if they raise interest rates and the market corrects, the person who's in power currently, Joe Biden, could lose a lot more favor amongst voters, right? And the political party, the Democratic Party, the Democrats, not the Democratic Party, the Democrats could lose a lot of voters from that. And it gets down to the politics of the situation. And so, if you're a president and you care about power more than you care about the people, I'm not saying he does, I'm just saying that's what it is, then you're probably going to want to maintain the status quo, right? Because you don't really want to cause anything massive that's going to negatively affect basically your entire country, because going into a corrective period, a massive corrective period of the stock market, a recession, negatively affects literally your entire country. And so that's obviously not what we want to do, but I think the responsible thing for the Federal Reserve to do right now is to raise the interest rates. They've been too low for too long, and honestly, they're not really doing much to fight inflation right now. They're just doing a lot to kind of speed it up. And this unsustainable rally, I'm not even talking about just the last year or two. I'm talking about, ever since 2008, pretty much. This unsustainable rally needs to come to an end. It's clearly unsustainable. I mean, you can look at the slope of this right now. Straight upwards, when COVID happened, it just went to another level and just angled straight to the sky. Very unsustainable. The market is in a terrible position. And obviously, a lot of those things are fundamental. Now, let's talk about technicals for a second. We have bearish divergence on the S&P 500. We've dropped below major support. The 50-week SMA is being tested right now. We've got 3 days to close above it. As for the DJI, the Dow Jones, bearish divergence once again. Clear bearish divergence playing out since May 2021. And we've finally seen a drop to the downside. And we're below the 50-week right now. We've closed below it, actually, which is negative as hell. And as for the NASDAQ, same story. Bearish divergence. We've closed below the 50-week. So the S&P 500 is hanging on by a thread, and the DJI and NASDAQ have entered downward trends. And so this is obviously a bad sign, even if the Federal Reserve don't raise interest rates today when this meeting takes place. If they do it in March, 2 months is not a very long time for the stock market, right? And so the trend is just going to be downwards. Yeah, we may see some relief until that point. But when those interest rates rise, historically, you don't really see any upwards movements after something like that, at least for about a month. The last time we had rate hikes, significant ones, was, I think, late 2018. I think we're looking at about start of November 2018. We can see that led to a bit correction there, and this is the S&P 500. That was a correction of about, let's say, a 16% correction, which is massive for the stock market. On the Dow Jones, in the same time period, we had a correction of about 19%, and on the NASDAQ, we had a correction of about, let's go to 2018, a little bit of a smaller correction here on the NASDAQ, 17%. You have to keep in mind that in 2018, 2017, these were times in which the market wasn't in such a critical position, inflation wasn't so high, and so those interest rate reactions were actually very small. Now, as basically every single global economist or every single reputable economist will tell you, inflation rates are at a critical level. The economy is hanging on by a thread, and there's lots of global events going on, like COVID, like the potential war, what's going to be going on there. I don't think it's going to happen, but it might, and lots of different things. I'm sure you can name 10 of them. But the point is, the stakes are high right now. There's more fear in the market than there was in 2018. And so a rate hike at this point in time will probably cause more of a correction. That's just going off historical trends and what typically happens when you see rate hikes. So look, doesn't look bullish right now. You'd have to be very, very, very irrational or very, very, very uneducated to be bullish on the traditional markets. Okay, they look terrible. And if you're not bullish on the traditional markets, you shouldn't be bullish on Bitcoin. Bitcoin has not reached the point in which it is separate from the traditional markets yet. That is the end goal. That is not the current reality. Bitcoin is not independent moving, right? It is very, very correlated to traditional markets. If the traditional markets drop, you can wave goodbye to Bitcoin for a while, and you can say hello to a 50% correction, to be honest. So look, we have to kind of consider, and this is one more thing I want to bring up, this is something Megawell brought up, that, do you really think, when it comes down to it, do you really think that a drop from November 10th to January the 24th, right, a drop that lasted about 2.5 months, 52% was caused by retail investors? No, I'm going to give you the short answer. Definitely not, right? Retail investors do not have that much power in the market. This was caused by the whales, the big players, the institutions, because they are preparing for what's happening, what's about to come. And they've already prepared for it. And so this is not a video telling you to sell, not a video telling you to buy. It's not a video telling you to do anything. I'm just telling you the facts. They've already sold. Okay, they caused this chain reaction because they know what's coming. And they know the current economic situation in the US particularly is not sustainable, and they know that interest rates have to rise. And if they don't rise, well, America's just digging themselves into a deeper hole. So it's kind of a lose-lose scenario here for the United States right now. They raise the interest rates, very likely, not certain, but very likely we'll head into a recession. Okay, if they keep the interest rates the same, it might be fine in the short term, but over time, inflation is just going to kick in and absolutely decimate the economy from the inside and cause riots and revolts and probably coups across the United States. So not really any good scenario here, but the point is the market is way too fearful to be interested in right now. And I have said before, getting over 48k will make us bullish again. I still stand by that, because in order for us to get over 48k, we need to see something fundamentally change in the world here, and in regards to the Federal Reserve and how they're acting, because we're not going to get over 48k without the interest of institutions, and institutions aren't going to get interested in Bitcoin without confidence in the global markets. So very critical time for Bitcoin tonight and also mid-March. Very, very critical times. Thanks for watching, guys. Hope you enjoyed, and I'll catch you in the next one.